First week of every month, every working professions, they will be very happy. You know why? Because salary will be credited. Friends, it can be 1,000 rupees, it can be 10,000, it can be 1 lakh rupees. If something is credited to our bank account, we will be very happy, isn't it? If something is debited from our bank account, we will be very unhappy. In the same way, many people are looking for regular cash flow, regular income. For them, investing into the systematic withdrawal plan SWP is going to be one of the best option. Hello friends, this is Vijay and welcome back to my channel. Friends, in this video, I would like to discuss about what is SWP, how it works, how it can be benefited in the long term. Friends, you can stay till the end because you'll be learning a lot in this video. Let's get started. Warren Buffett is one of the most successful investors in US market. Warren Buffett always says that so you should have a multiple source of income. Friends, if you want to achieve the financial freedom as early as possible, definitely you should have a multiple source of income. Then only you can achieve the financial freedom as early as possible. Friends, if you want to create a multiple source of income, we have various options. The first one is real estate. Real estate, which is one of the best investment option. But if you want to invest into the real estate, so you should require huge amount of cash. Depends on the place, depends on the city, amount will increase and decrease. As well as we have multiple problem in real estate. The first one is high maintenance cost, tenancy issue, documentation problem, and many more. Second one is bank FD. Earlier, bank FD was one of the best investment option because we used to get around 8 to 9% of return, which was very good. But right now, interest rate in India, which is all time low, as well as there is going to be a high taxation, no capital appreciation. If you invest into the FD, your capital amount, which is not going to grow, as well as FD, which is not going to beat the inflation. Inflation itself in India around 7 percentage, FD, which is going to give around 5 to 6 percentage of return. So, which is not able to beat the inflation. In the long term, you are not going to create wealth. Is there any better option other than FD and real estate? Systematic withdrawal plan is going to be one of the best option. Once you invest into the systematic withdrawal plan, here you have to invest some lump sum money. With that lump sum money, every month you are going to get the regular cash flow as well as in the long term you are going to create huge wealth. Systematic withdrawal plan is a facility which is available in the mutual fund. Once you invest some lump sum money, with that lump sum money, every month you are going to get the regular cash flow. Here, some units will be sold from your mutual fund portfolio and amount will be credited to your bank account every month. So if you want to invest into the SWP, systematic withdrawal plan, investing into the balanced mutual fund is one of the best option. Why balanced mutual fund? Because once you invest into the balanced mutual fund, here your money will be invested into the equity market and debt market. Around 70% of money will be invested into the equity market. Around 30% of money will be invested into the debt market so that you can create a balanced portfolio. During the bull run, they will increase allocation into the debt market. During the correction time, they will increase allocation into the equity market. This is how they are going to create a balanced portfolio as well as low volatility. If you compare to pure equity mutual fund, auto asset allocation will be done here, rebalancing will be done here, as well as you are going to get the better risk adjusted return. That's the reason if you want to invest into the SWP, you should invest into the balanced mutual fund. In the balanced mutual fund, you will be have safety, you will be having liquidity, you will be having regular income, as well as your capital is going to grow in the long term. Some of the benefits of SWP. Here you are going to get the regular income. So whatever the lump sum investment you are going to do with that lump sum amount, you are going to get the regular cash flow. Financial discipline you are going to get. Your investment will grow. You will be having flexibility. Whenever you want to take out your money, you can take out. Whenever you want to top up your investment, you can top up all the facility, which is all the flexibility which is available in the SWP. Friends, now I would like to use some example how some of the SWP schemes which have created huge wealth for many investors. The first one is DSP Equity Bond Fund. So over the last 10 years, the fund has generated around 40% of return. So if you have done 20 lakh rupees investment in 10 years back, if you have taken a 10,000 rupees monthly withdrawal, your total withdrawal in 10 years is which is 12 lakh. Still, your 20 lakh, it has grown to 49 lakh. Second one is ICICI Prudential Equity Debt Fund. So over the last 10 years, the fund has generated around 15% of return. If you have done 20 lakh rupees lump sum investment in 10 years back, if you have taken a 10,000 rupees monthly withdrawal, your total withdrawal done in 10 years, which is 12 lakh. So with a 15% of growth, your market value will become 54 lakh rupees. Next one is SBI Equity Hybrid Fund. So over the last 10 years, the fund has generated around 13% of return. If you have done 20 lakh rupees lump sum investment in 10 years back, if you have taken a 10,000 rupees monthly withdrawal in 10 years, your total withdrawal is done 12 lakh. Still, your 20 lakh has grown to 46 lakh. Next one is Canara Robeco Equity Hybrid Fund. Over the last 10 years, the fund has generated around 14% of return. If you have done 20 lakh rupees lump sum in 10 years back, if you have taken a 10,000 rupees monthly withdrawal in 10 years, your monthly total withdrawal will become 12 lakh. So your 20 lakh basic investment, it has grown to with a 14% of return, 49 lakh rupees. Next one is Franklin India Equity Hybrid Fund. Over the last 10 years, the fund has generated around 15% of return. If you have done 20 lakh rupees lump sum in the scheme, if you have taken a 10,000 rupees monthly withdrawal in 10 years, you are going to take monthly withdrawal of 12 lakh rupees. Your 20 lakh, it has grown to 54 lakh rupees. Friends, in this video, we discussed about what is SWP, how it is going to work, how it is going to be benefited in the long term. Friends, SWP is a complete opposite of SIP. In SIP, you are going to pay some amount every month. With that amount, after 10 years or 15 years, you are going to create some big corpus. With regards to the SWP, in SWP, you have to invest some lump sum amount. With that lump sum amount, every month, you are going to get some payout. For that, we call it as a SWP. Friends, I hope you find this video useful. If you like this video, please to subscribe, please to share it with your community. If you require any help with regards to the mutual fund investment, you can contact me in the below link. Thank you so much.